Hi, everyone, and welcome. Today, we're speaking about a critical topic across all boards for professional services business, and that's resilience. What makes a business resilient? And most importantly, how do you build a resilient business? We're going to provide you today with a blueprint for resilient businesses, and specifically for resilient professional services businesses.
Very important topic.
A very important topic. But first, let's start with introducing ourselves. My name is Gabrijela, and I am a senior account executive here at Productive. And I am joined today by my colleague Fran, who is also senior account executive.
Great to be with you today, and thanks for the intro, Gabriela. You're right. I really think this is an important topic we're focusing on today. And in case you're new to it, Productive is an end-to-end system for professional service businesses that aims to help you streamline your operations in a single place and essentially work more efficiently. How do we achieve that? Well, we achieve that by focusing and by answering the following questions. So, usually the first one is the operational question of what needs to be done. What are the due dates? What are the Gantt charts? What are the milestones? Essentially, Productive helps you answer and collaborate and deliver projects in a single tool. A second common question we get is, are we going over the budget on this job? Are we over servicing in real time, but also based on the forecasted hours, are we expected to go over our budget? The second question, or the third question to be more precise, is who is available to take and to work on this project? Tied to this is also the next question, which is what does our future utilization per person per department look like? This is very important for us to know who's on the bench and take on more work. Another question is how much money do we realistically have in our pipeline? Also a report we can very easily build for you. And also tied to this is what do we need to invoice? Now, Productive integrates with a number of different accounting tools. And once you plug in your accounting tool, you can very easily see what needs to be invoiced. You can create those invoices, push them to accounting, and payments are synced back. And I would say the biggest benefit is that it's all tied together in a single place. And here's a quote before we get started from one of our long-standing customers. The main benefit we get from Productive is planning, clarity, everyone working towards one system. It facilitates reporting hugely. It's very easy to use. Also, I think one of the biggest things for me is the fact it's constantly improving. This probably relates to our bi-weekly feature and product updates that we release.
Well, companies that are doing things right will not give away their secret sauce just like that. But from our vast experience working with agencies, consulting firms, IT services, software firms, or any other professional services company, resilience basically boils down to two paths. So the first one is intentional growth, not just reacting to market shifts, but growing sustainably and strategically. The second one, which has proven to be very important lately, is increasing and protecting your profit margins so you have a buffer when things get tough. So to provide a structured approach, we have broken down these into 10 key pillars to really talk about what you should focus on to build a resilient business. Let's start with forecasting. One of the things that we're seeing quite often is that companies operate week to week without having a long-term vision of what's going to happen with their business. Their visibility doesn't really go beyond the next couple of projects finishing up. Unfortunately, planning 2 or 3 weeks in advance is just not enough. You should be aware what's happening at least a quarter ahead to be able to react on time. So this kind of approach, proactive approach, would facilitate the following: resource and capacity planning, ensuring you have the optimal allocation of your resources. No one is sitting on the bench and no one has too much work on their plate. Informed hiring decisions. So knowing in advance who you need to hire and when really helps you pick the best talent and also decreases the cost of maybe expensive contractors that you hire last minute. And then ultimately financial stability. With this kind of overview of what's going to happen in your business, you can anticipate cash flow and mitigate potential issues if you spot you're going to have a dry season.
Next up is profitability by client and also by service. Why would you look into these KPIs for building resilience? Well, simply because your most profitable services and clients will guide your business towards a specific niche and towards a specific area that you probably should be focusing more of your time and efforts on. Which is why, of course, it's important for us to know which service types, which employees, which teams are more or less profitable and how do they perform. And unfortunately, we have had customers tell us that the data they found using Productive actually led them to have difficult discussions with their clients and actually led them to realize something that they weren't expecting. Here's a quote of one of our customers who actually ended up terminating contracts with some of them long-standing clients only a few months in of actually using Productive. As Ilya here mentions, we thought that we were at least at zero with them or that we have had some small earnings. But it turned out that we were losing money because the money they paid us did not cover salaries, fixed overhead per hour, and variable overhead per hour. Of course, ask yourself, do you think you're in a similar position, especially with some of your older, long-standing customers? And we all know how difficult it is to adjust rates to our long-standing customers. According to a bench press report, the average gross profit margin in 2024 for agencies over £1 million in revenue was 39%, an all-time low. And we believe it should be at least at 50% mark.
One important aspect of resilience is client concentration. Something that you should be asking yourself is, how dependent are we on a few of our key clients, or most importantly, on one of our clients? In a recent study our team did on 800 companies, we concluded that around 15% of agencies and consultancies reporting they derive over a quarter from their revenue from a single client, which is dangerous because if that client cancels overnight, you're in big problem then. So basically, the conclusion here is that the more clients you have, the less of a risk you have when someone cancels overnight. First of all, diversify your client portfolio. Actively work on seeking new clients so you can diversify it. Even if now it seems like you have a lot of work, tomorrow if a client fires you, you want to make sure you have enough of other clients. Monitor client health. Like in the example that we had previously, really make sure that you understand which clients are bringing in profit and with whom you want to keep working because they're bringing in steady profit for your business. And do this regularly. Develop contingency plans. So it's always good to be prepared on with some what if scenarios. What happens if this client fires us tomorrow? Will we be able to make it? We've heard, unfortunately, so many stories of great businesses that had to shut down because the client suddenly...
Because of client concentration, yeah.
Exactly. Client suddenly cancels their collaboration. They need to close down the business because they depend on them a lot.
Now, let's move on to the cash flow and payment efficiency. This is number 4. A strong business, of course, cannot run without a balanced cash flow. And yet, many service providers still face inconsistent revenue streams, which, of course, we can understand, and delayed payments. Simple strategies like asking for upfront payments, automated payment reminders just to simply remind them and to stay in our clients' heads, and also faster invoicing cycles can really go a long way in keeping your cash flow steady. And of course, the faster you invoice, the faster you get paid. It's that simple. Yet many firms are still spending 1 to 3 or even more days per month just gathering billing data, gathering time and materials to make sure that they invoice everything they have. This time, of course, could be spent better. It could be spent on value-adding work. And we have numerous cases where customers have reported saving hours and days of their time on invoicing. With Productive, you can streamline your invoicing process by easily tracking uninvoiced amounts per job, per project, and generating invoices directly from within the platform. Also, as previously mentioned, most of our customers integrate their accounting tools such as Sage, QuickBooks, or Xero with Productive to enable seamless invoice sync from Productive. In addition, you can send invoices and automated payment reminders straight from Productive. Once a payment is received and synced back to Productive, From the accounting tool, your project managers will be able to know and they will see the status of that payment reflected in real time. This really is a big benefit of connecting Productive to your accounting tool, because your project managers and people who otherwise wouldn't be sitting and using the accounting tool will see in a single tool what's been paid and what isn't. And this leads us to number 5.
Yeah, number 5, we're right in the middle. Another resilience building strategy is building stable recurring revenue streams. Recently, our team found out that around a third of the agencies and consultancies generate 80 to 100% of their revenue from recurring sources. That's great, and that's a great positive trend. Because just a year before that, only 22% generated that amount of revenue from recurring sources. We think this is great because building recurring revenue can lead to several positive aspects for your business. Stable cash flow planning, reduced sales pressure, and building a better client relationship.
Number 6, pricing strategies are, I think, always a hot topic and subject of debate. Which pricing structure will ensure we're making enough profit? How do we define our billable rates? Are we using, blended rates or billable rates per role? What percentage of work should be allocated towards retainer projects and securing new one-off projects? And is there even a single best pricing model that you should apply? Does it depend per client, perhaps? It may not seem this way at first, but we believe pricing strategy is actually an integral part of making sure that your agency and your professional service business is actually resilient. Many firms struggle to define how and what to charge. According to Bench Press report, those who offered 3 pricing strategies were actually twice as likely to have high conversion rates, above 60%. This was very, very fascinating for me to learn.
Well, this might be obvious, but for business resilience, another thing to keep an eye on is overheads and factoring your overheads into pricing, making sure you're making enough profit to cover for the operational expense of running your company in the first place. So when was actually the last time you revisited your operational expenses? And fixed costs like rent, software, subscriptions, utilities, they can slowly eat away your margins. Productive can calculate your overhead factoring in 2 things: the facility cost that we talked about, which would be that rent and utilities cost, the fixed part, and then the variable cost as well. A variable overhead such as internal time, basically bench time as many call it, paid time off or vacation, and similar factors can automatically be factored into the overhead cost and incorporated into the calculation for your profit margin on client projects. This would give you accurate insights into the net profit. So areas for review in your company when it comes to overhead would be, as we've said, software subscriptions, assess the utilization and the ROI you're actually getting on different platforms they're using, utilities and services. So try to negotiate better rates or discount unused services. And then office space. Evaluate the necessity of having a physical office space in this era of remote work, because it is a big chunk of your cost.
And it's always interesting for me to see how the overhead actually changes throughout months, and how during summer, around Christmas time, of course, the overhead will surge.
Yes.
Yeah, but it's also interesting to compare this year to year, the actual overhead, how it changes.
Yeah. Now, here's a big one. Having a dedicated business development. Our advice here is definitely to build a dedicated sales or business development team. Many companies still rely on partners or founders to do this work because they're so good at it, but that's not really scalable because founders do so many other things. So in our last survey that we did, only 20% of business development teams actually fully own the sales process. When you're serious about growth, you also need to invest in growth, and you need a team that's solely focused on generating new opportunities, not just reacting to referrals or repeat clients. Even if you have a lot of work today and a lot of referrals are coming in, that might not be the case in 3 to 6 months. So make sure you're constantly working on your pipeline. So here are some key takeaways for you. We would suggest that you hire a specialized BD team, develop a business development strategy, and really leverage on CRM tools. They can mean so much after just a few months of using them and having the data there.
Thanks, Gabriela.
You're welcome.
Okay, here's one that sounds like a catchphrase. Don't forget to market yourself,
Mhm.
or as some people call it, marketing. According to Promethean research done in 2023, digital agencies invested an average of 7.1 of their annual revenue on activities that generated new revenue, like marketing and business development. What was traditionally 3 to 5% of annual revenue has gone up to meet the demands of increased global competition. Some of the most common ways agencies market themselves are by updating their digital presence, right? Quite obvious, but again, often overlooked. Content marketing, so publishing thought leadership articles, case studies, webinars, of course. And I would say the old-fashioned networking, right? So participating in industry events. Finally, after COVID, these are booming again, which I'm really glad to see. Number 10, hiring is always tricky, but in a resilient business, hiring is forecast-driven, not just based on your gut feeling. And this actually takes us full circle to what we were talking about at the beginning of this webinar, forecasting. So you should be using forecasted utilization data to guide you when and where to hire, which areas, which skills, which teams are in demand and when. Also, make sure to consider and take into account options like freelancers when appropriate. Bringing on full-time staff too early can, of course, backfire if the demand fluctuates. Some strategies I would say worth mentioning here are always monitor your utilization rates. Aim for a balance that prevents burnout, but again, maximizes productivity. I would say that's around 70 to 80% from our experience, right? The second thing is consider freelancers or contractors as previously mentioned. So, closing remarks. While external factors may be beyond our control, internal strategies are within our grasp. Implementing smarter forecasting, diversifying revenue streams, optimizing cash flows, monitoring and taking action on our forecasted utilization can significantly enhance your firm's resilience.
Yeah, we hope that today's session kind of highlighted the blind spots that you need to fix internally. And we gave you a few practical strategies to take away that you can start working with straight away now. And if you'd like to see how Productive can help you with that and strengthening your firm's operations in general, we're happy to chat anytime. So thanks again for being with us. And we're looking forward to seeing you next time.
Thank you, Gabriela, and see you next time.
Bye.
Bye.